If you are anything like me, you like to hunt volatility in the stock market, especially being an options trader. Aside from looking for stocks that are bouncing all over the place, acting crazy, there is one recurring event that you should always be looking for: earnings. Most stocks report earnings once every 3 months, so looking for them and being aware of when they're coming is definitely very important. Since I'm primarily an options trader, selling calls or selling puts, volatility is extremely important to me because I can make a lot of money off of time in just a few short days. So the first thing I like to do is to go to the NASDAQ earnings calendar. Here you will see all the upcoming stocks that have earnings coming up. Of course, you can always search for a specific stock if there's one in mind that you want to buy. Today's Friday, March 8th. Typically on Fridays, you're going to have the least amount of stocks reporting earnings. Mondays too, not the most. Tuesdays to Thursdays are when the majority of stocks are reporting earnings. So you can click around the different days. Monday, March 11th, for example, we can see what stocks have earnings on this date. If you're going for bigger, safer corporations, typically the volatility is not going to be there, but it never hurts to double check. Oracle, as you can see, is a huge company, likely going to have lower volatility than smaller companies, which means the percentage you're looking for when selling an option is going to be lower. Something I typically stay away from, but in this case, it's actually not bad. Looks like it comes out to 4.46% there. If you're getting paid $498 to sell the 112 put. Let's check out Wednesday, March 13th. Dollar Tree, I know I've made some money off of Dollar Tree off earnings before, so let's take a look. Dollar Tree is not super high, it's only 4% for the 147 put, which honestly still isn't bad for a company as dominant as they are. You know they're going to be sticking around, not too much risk there. But let's keep looking to try to find one more volatile. So going to Thursday, March 14th, we can see if there's anything here. We can keep scrolling down to see if there's anything with a higher premium. Let's check out here, Turtle Beach Corporation. So without looking at the stock at all, this premium is pretty good. It's at 5.3% for the $10 put. It's already 5.8% out of the money. So break even on this, if it goes down 11% or less off of earnings, you're making money. Of course, anything after that, you are taking a loss. But that's a pretty good risk for the upfront payment of 5.3% that you'd be getting off of that $10 put. We can check out the chart to see if this is a risky play. Looks like decent volatility in the last 3 months. In the last year, it's up 37%. In the last 5 years, down 30%. Seems somewhat stable, not too risky. Looks like where it's at, there's a good chance that it will stay around that $10 range. So you can hunt around and keep looking for higher volatility or stocks that you'd like. This is a really cool and fun tool I use playing earnings to make money just off of the volatility and the time of these options expiring on the weekly. So another way of hunting for volatility that goes hand in hand with this strategy is to go to the stock screeners that Robinhood offers. You can go to upcoming earnings and there's all sorts of filters you can use to look for that volatility. I like to set my earnings date for just a few weeks out. Today's Friday, so let's do within the next 5 days. Obviously, by choosing earnings, that in itself is increasing volatility, but you can use the filter volume to see how much a stock is being traded. Typically, higher the volume, higher the volatility, higher those option costs are going to be in terms of percentages, the more money you'll be making as an option seller. Obviously, there's more risk when there's more volatility because there's a higher implied movement in the stock. So you could lose more than something like Walmart or one of those big companies that have been around forever, McDonald's, where these earnings are super consistent. Everyone knows what they're going to look like. And it's not as big of an event because the stock isn't going to move all that much from a very expected earnings, whereas some new technology or AI stock that has a lot to show in the earnings, that's going to be moving a lot more. But you can also make a lot more money, higher risk, higher reward. We can check out Path just because their share price is over $1. Clover Health at number 1 Anything under $1, options get pretty tricky just because there's not a lot of movement in share price, and typically strike prices of options aren't in super high intervals, or probably like $1.50. So anywhere in between gets kind of funky if it's not right on the line of a strike price. Anyways, going to Path, we can see that their volatility is super high off of earnings, getting $194 by selling that 2350 put for March 15th expiration. That's almost 8.3%. That's really, really good. It looks like you got about 1% cushion before that strike price of 23.5 is reached. So from this, similar to the Turtle Beach company we were talking about, both scenarios, you're looking at a 10% drop roughly to break even. This one is you get paid a little bit more upfront. The cushion's the same though, but that is really everything. You can just use these few quick tips to look around for volatility. You can keep stuff on watch, see how many stocks go in the direction that they're supposed to, or how many stay kind of in a similar range and don't even move that much from earnings, and both sides of the call sellers and the put sellers are both winning. Because honestly, there is no better feeling than when the stock is flat and you're still cashing out 5, 8, 10%, whatever the premium is. But anyways, I hope these tips help, because I used to do a lot more research looking for volatility in stocks before I found out it's actually as easy as just looking at the calendar and looking at some stocks on the Robinhood screeners, and that's really all you have to do. Let's go, guys.